Hi, I'm Kara Murphy, and this is Money with Murphy. Nearly $1 trillion are being invested in infrastructure for artificial intelligence. That's an absolutely eye-popping level, equivalent to 1% of the size of the whole US economy. It's not surprising then that when I talk with investors around the country, the most common question I get is, are we in an AI bubble? The concern is warranted. For the last 3 years, the market has looked past tariffs and conflict in the Middle East and other policy uncertainty and has rewarded companies at the forefront of developing artificial intelligence, or AI. Meanwhile, this new technology promises to remake how we work, how we communicate, how we understand the world around us. But really, how long can this AI boom last? Well, history can provide a useful framework. AI may be a new technology, but we have been through other technological revolutions before. Think things like railroads and electricity or fiber optic cable. Those and other transformations provide some important lessons for today's investors. Typically, during the first stage of these types of technological revolutions, companies spend oodles of money creating whatever the new infrastructure is. Think of the miles of railroad track that was laid in the first decades after the steam engine was invented. From 1860 to 1873, track mileage in the US more than doubled. Not long then after that railroad boom and bust, electricity was introduced to factories and individual homes. Utility companies rushed to build power stations and transmission lines. Or even more recently, fiber optic cable. In the late 1990s, millions of miles of fiber optic cable was laid in anticipation of internet traffic that was expected to grow exponentially kind of forever. The companies weren't short-sighted. They knew that the new technology they were building had huge fixed costs and low marginal costs, meaning it costs a huge amount of money to, say, build your first mile of railroad track, but not so much to build the second, and so on. So they were incented to build big and build early in order to get scale as demand grew. Sound familiar? The companies at the forefront of building out AI capability, also known as hyperscalers, are expected to spend, as I said earlier, $1 trillion this year on data centers, power, and servers in order to feed their artificial intelligence dreams. If current trends hold, that number may even prove low. For the last 3 years, the market has rewarded these companies for spending handsomely on AI infrastructure. And meanwhile, these companies have been able to grow their earnings substantially. But still, investors worry, will the AI boom go bust? While previous technological revolutions rewarded the companies building the technology, eventually other companies and individuals benefited from it. Merchants could ship their goods from one coast to the other with the help of railroads. Individuals could visit relatives hundreds of miles away. That same fiber optic cable laid dormant for years eventually powered Netflix and my family's weekly movie night at home. I expect we'll see a similar shift with AI. Companies and individuals around the world are experimenting with AI and integrating it into their daily workflows. Industrial companies are reworking their factory floors. Biotech companies are using AI to improve their research. Financial companies are using AI systems to be more efficient. I am learning how to not kill my plants. As these companies improve productivity and expand their margins, investors can gain access to AI-driven earnings growth without paying an excessive premium. For instance, companies in the Magnificent Seven who've been at the center of the AI boom have grown earnings by over 30% the last 2 years. Meanwhile, the other 493 or so companies in the S&P 500 have had flat earnings. This year, though, we begin to see a shift. The Mag 7 are expected to grow earnings by over 20%. Still impressive, though slower than the last couple of years. The other 493 or so will see their earnings growth accelerate to about 10%. Some of that growth is likely powered by companies incorporating AI to become more efficient. The AI story may indeed be shifting from who builds the infrastructure to who benefits from it. As AI becomes cheaper and more widely adopted, the opportunity broadens beyond just a handful of hyperscalers to companies using the technology to boost productivity and grow profits. And for investors, that shift may mark not the end of the AI era, but in fact the beginning of a more durable and diversified one. Until next time, invest wisely and live richly.